What is that one channel they had on some old lady?
Sweet. Yo, what's up, guys? If you're tuning in, we're really excited because we're about to start doing live video in the morning times. All right, so Cleveland here, by the way, head trader here with Top Traders. Hope you guys had a great day. US session did just wrap up about 15 minutes ago or so, and I wanted to catch the closing bell, but we were having some technical difficulties. All right, but tomorrow what we're gonna do is 9:30, we're gonna be live again, and what we're gonna be going over is, let's see what we got. All right, so as you guys know, first week of the month, so we're gonna have NFP. Okay, we're gonna have, we just had non-farm payroll today. Those numbers did come out higher than expected, but that was ADP non-farm payroll, right? So that's that private payroll company that's making billions of dollars, and they basically see all the different payroll and income coming in from all of the different companies in the US, but they did say that there were more jobs added. So we'll see if that's a decent precursor to what we see happening tomorrow as well. That's gonna be exciting. All right, but let's see what we're looking at right now in regards to our NFP numbers. Boom, boom, boom. So last month, NFP, we were looking at 164,000 and we got 164,000. And just overall, it does seem like we have gone slightly above target in regards to the forecast, okay? US economy is still growing. We know that that is one of the core reasons why we're seeing the dollar at all-time highs. That's pretty interesting stuff. So we will be here tomorrow again to see what happens when this data hits the markets, and that'll be really exciting. So if you guys have any questions for us, and we're gonna be live again here for maybe the next 10 minutes or so. I'll just be meandering around the office. If you guys got some questions, I'll come on over. I'll answer some of those questions. And yes, folks, super excited. So I also wanted to talk to you guys about the unemployment rate as well. Unemployment rate has really been stagnant at 3.7, which is really interesting. That is like the lowest point we've seen in terms of unemployment in decades, right? And we've been able to keep that trend in regards to that 3.7, 3.6. At one point it ticked back up to 3.8. It was at 3.8 all the way back in April. So since April, we've been either at 3.7 or at 3.6. So all this data that's coming out in regards to positive US economic growth is making it so that this dollar keeps running, okay? So if you go take a look at your DXY, you're not gonna see this reflected, all right? Because right now on the DXY, you guys, if you don't know how the DXY is composed, 53% of the DXY is the euro, okay? So you're almost looking at an inverse correlation of the euro USD, except it's the US dollar, then 53% euro, and then subsequently after that, maybe about 15% pound, maybe about another 11% JPY, so on and so forth. So that's why we don't like to use the DXY, okay? We like to use our own proprietary dollar index. That is super effective because then we have the dollar and then we have 6 other pairs, all right? And those 6 other pairs are equally weighed, all right? And that's gonna be really important for you guys if you wanna see truly how the dollar is performing, all right? So that's the index that we're looking at. And right now, we'll talk about it a little bit more tomorrow. We actually have a video coming out. There's gonna be 2 videos tomorrow, the live, and then Kyler is gonna push out a video on the Euro USD. That was a really profitable trade that we've been in since August 8th, and we were looking at that dollar index, and we're gonna go into a little bit more detail as to how that dollar index, our dollar index, is composed, okay? So I wanna see some of you guys' questions. Again, if you guys got questions, shoot them at me, okay? I'm right here looking. Outside of that, I'll just keep talking, all right? Let me see what you guys gotta say. I did see some stuff that popped up. Let's see. What's the biggest movements? Good question. All right, so Jefferson asked, what are the biggest movements? Jefferson, I don't know what context you're asking in regards to that in terms of time, but I can tell you the biggest movers of today. And right now, in regards to the sell side, the biggest movers on the sell side is, so we have the JPY and the CHF. That's interesting, right? Because we're about to put out a video today, a little bit later on today, I want you guys to come back to the channel, where I actually talk about the CHF and the JPY in regards to a buy idea if those markets kept trending to the upside, and they obviously didn't. Those are our biggest sell side movers of the day. And when I say the biggest sell side, I mean they are massive. Okay, I wish I could upload photos into the chat so you guys could see it, but I do talk about it in good detail on a video that will be dropping a little bit later on today. So right now, the biggest mover of the day, sell side, is the CHF. A lot of that is because of different things happening. There's been less of a conversation about what's happening trade war related. All right, and so that's a pretty big deal. And so when those conversations start to slow down a bit or even get a little bit more positive, the market just turns all the way around. Okay, so that's pretty interesting stuff. So CHF to the downside right now, JPY is to the downside today as well. Biggest positive mover of the day, you wouldn't even expect it, it is the pound. Okay, so the pound did have a massive push to the upside. So if you're a long pound today, you did pretty well. And what's interesting is if you've been a long pound, maybe over the past 7 to 10 trading days, you haven't done so bad. If I look at the pound right now, the pound has been off of its lows for the past 14 or 15 trading days, so about 3 weeks. And the past 2 days for the pound have been the largest buy side moves we've seen on the pound, literally guys, since May. Okay, so the past 48 hours on the pound, we have seen the biggest buy side movement in what's May? About 4 months. Okay, that's pretty massive stuff. Is that a trend? Is this a reversal? Why is the market trading back to the upside? These are some good questions. If you go take a look at the dollar, the GBPUSD right now is pretty interestingly composed. All right, so right now GBPUSD is, I'll actually go take a look. And eventually we will be able to share the screen with you guys. Give me some more questions, by the way, if you guys are here just camping out. I want to know what you guys are thinking. But right now GBPUSD is trading back to the upside. That's some pretty interesting things as well. All right, so here, let me take a look at the, some of the questions. Okay, there's a lot of questions. All right, love your videos. Thanks, Mohammed. Appreciate that, buddy. I love your videos. Any idea for upcoming NFP? So when you're trying to rationalize what you want to do in regards to a data release, okay? So you just asked, what do I think is going to happen in NFP? That's called forecasting, right? And so what happens is, and this is what we get, a lot of folks that come into the academy or that are calling us in some capacity, they're always asking the question, how do you guys read the economic calendar? Man, I'm really having a hard time reading the economic calendar. I know that's the core of how fundamentals work. You got to go off of that economic calendar. It's not true, all right? It's not true. Here's a great example, okay? I don't really care what's going to happen on NFP. It doesn't really matter to me, all right? Think of it in this context. I think we all would assume that GDP or unemployment is really important, right? Those are really important factors of what's happening in the economy. So as of right now, GDP and unemployment for the pound isn't so bad. Right now, pound GDP is, right now pound unemployment is doing pretty good. It actually has ticked down through this entire Brexit debacle, right? That is on the economic calendar. You had a positive data release that came out in regards to the pound having less unemployment on the economic calendar. Are you going to start buying pound? Now, I do know that I'm kind of contradicting myself because the pound has gone up in the past 48 hours. But you're not going to buy the pound because of good data coming off of the economic calendar, because Brexit is looming, okay? So you have to basically factor in the most important data release at the time. The data releases, they all weigh differently at different time periods, right? So right now when it comes to the trade war, right? So if we look at the NZD and if we look at the Australian dollar, those currencies are falling off a cliff massively. While you're watching the video, maybe load up your charts, go to your maybe trading view, and take a look at NZD USD, take a look at NZD, maybe what's another one? Take a look at NZD JPY, take a look at NZD CHF. Look at anything NZD related, and you will see the NZD is losing value, okay? It's not because of anything that's happening on the economic calendar though. So what you'll notice is, the economic calendar isn't the most important factor when you're looking into how to assess markets from a fundamental standpoint. It's more about the pressing catalyst and the most important thing that's happening in markets at that given time, okay? So for example, during 2008 when the market was collapsing, during that time, there were some data releases that were coming out that people deemed positive. Look, if you're buying into the recession because of some positive data releases that you're seeing on an economic calendar, you're playing the wrong game. All right, so the economic calendar is not the most important variable in this game. So basically, it's going to be really important for you to assess what's happening outside of the economic calendar. That's why these markets are moving. Trade war concerns, geopolitical risk, commodity reasons, right? When oil was selling off, oil through January and throughout January to May had an 82% correlation with the Canadian dollar. All right, so as oil prices increased, the Canadian dollar increased, even though the Canadian economy, right, wasn't performing so well from the calendar standpoint. So again, if you're just doing things based off the calendar, that's not the most productive thing to do, and that's what we try to help our traders rationalize in the academy is that, hey, the calendar isn't the that's not what you're here to master. Okay, you're not here to master what's happening on the calendar. You're here to master what's happening in the actual understanding of how the economy works. Okay, so let's see what's driving GDP. Mohammed, what country are you talking about? Ooh, that's a tough name, but I'm gonna call you Double A because your first name's an A and your second name's an A. Your last name's an A. Do you guys only trade fundamentals? We got a little cameo from Kyler here. Let's see. It's not that we only trade fundamentals. Interesting question. So when you ask yourself, do you only trade fundamentals? That's kind of like fundamentals is the basis at which we execute. So fundamentals is like our baseline. That's how we try to rationalize a directional bias. You can't perceive or you can't get a directional bias without no fundamental understanding of what's happening in markets. So when you say, do we always use fundamentals? Technically, yeah, 100% of the time we're going off of fundamentals. But there are some instances where we might be looking at a 4-hour time frame where there maybe isn't a fundamental play, but there's something called a liquidity play. All right, and that's a really, really important factor in markets as well, where you can play the supply and demand from an intraday perspective. We do look at things in that context, and that is a technical based structure. That is a technical based scenario. So in that sense, you know, when we look at lower time frame positions and opportunities, yes, not all of those are fundamental plays. But I would say 90% of the time we're doing things in the capacity of fundamentals, or our biggest trades are happening because of fundamental biases that we're trying to rationalize. We won't put too much capital on those intraday opportunities. Most of our capital, most of our size, whenever we're navigating inside of our broker's accounts, are going towards those positions that we can quantify a little bit better in regards to what's happening in that particular opportunity. Okay, dokie. The physique is nice. Thanks, dude. Appreciate that. What about XAUD, gold? Definitely, we can have a conversation on gold. I want to talk, sorry, do you scalp news releases? That's not the game, man. That is not the game, okay? Scalping news releases, look, if you're trying to compete on how to blow your portfolio, you know, the quickest, then yeah, scalp news releases. But that's not a methodology that I would personally, you know, try to, get into. I'm trying to keep up with the questions. Didn't realize there was going to be this many questions. And this is what tomorrow is going to be all about, right? Tomorrow we're going to be basically here seeing what's happening in regards to the fundamental releases and seeing if that affects markets in any capacity.
Start from right here.
Okay, so my producer's telling me to start from that. He's a producer. He's a producer. All right. What's the difference between price action and technicals? That's a good question. That's a good question, Devin. So technical analysis. So let's just talk about the overall definition of price action, and then we can talk about a definition of technical analysis. We can both say that the definition of technical analysis to start off is the study of prices, right? It's the study of the actual chart itself, right? So you're trying to rationalize from strictly price, all right, what opportunity is there based off of the infrastructure that the market has created, right? Based off of the infrastructure of the asset that particular asset has created. So I would say that's a pretty decent definition of technical analysis. You're studying price charts, all right? You're staring at price charts. Back in the 70s and back in the 80s, they used to print out just literally 100-foot long price charts, and they would string them up inside of different firms. Back when I was working at Loma Management Partners, our head traders and our head guys over at the portfolio management team, they had price charts printed out on walls, okay? And so they were looking at technicals in some capacity. Everything they did, though, had a fundamental basis, but they would print out their price charts and look at them. And these were monthlies and weeklies. They weren't printing out 5-minute price charts, okay? And so they were looking for certain patterns. These patterns that they were looking for, it wasn't yet price action, okay? They were looking for certain market structures, all right? So technical analysis is real broad. It's like it's the overall study of price, right? But then when you go into more granular detail, you'll start to have conversations about market structure, all right? And market structure is a whole nother beast, because market structure is where you start to have a little bit of subjectivity, and that's where things get a little dangerous. You don't want your trading methodology to be based off of an idea that's your idea. You want to be as factual, as far down as possible, and then at the last second of your strategy, the last second of your edge, have a little subjectivity in there as to what you like and why you like it. Maybe it's because of your lifestyle, maybe it's because of you know, your overall skill set of how you're constructed. But you go more granular, you start at technical analysis and then you pull down a bit. So then you go to market structure. And market structure is interesting, right? Market structure is looking at the overall trend, right? Looking at consolidation. It's identifying certain price movements and why those certain price movements may react in certain facets. So you can rationalize a market structure as, let's say currently the market structure for the pound is what? It's a bearish one. The current pound market structure is a bearish market structure, but the way it's constructed is not only bearish, it's really parabolically bearish, right? Where you see massive sell side coming in at the moment. And so now you're trying to rationalize based off of that market structure, holy cow, now you're eyeing momentum. So that's the good thing about technical analysis. Technical analysis does give you all of these different views and all these different rationalizations of what's happening in the overall chart. So again, so you're looking at the market structure and you're noticing, holy cow, there's a lot of momentum. So boom, that's another factor happening from a technical perspective. You can view momentum. You can view the overall market structure as sell side. Now what else can you start to view? All right, if you now want to focus a little bit more on the price action, I would say price action deals with even more granular structures that the market has given you. Price action is the move and the ebb and flow of what is happening inside of the market structure, right? So when I look at price action, when I try to rationalize what's happening from a price action perspective, I'm looking at things on a daily basis, right? On a daily time frame, right? Maybe on a 4-hour time frame as well. I don't usually go lower than that. And so price action to me is more about what's happening from an intra-week perspective, and that price action is going to be driving my decisions on what I need to be doing right now. But technical analysis is just that high-end, just overall view of what's happening in markets, and then it gets real granular. I love price action. That's really what we pay most of our attention to, which is price action and market structure. Technical analysis can start to change over, right? It can go real quick in the charts. I mean, real quick into patterns, right? It can go into wedges. You know, you can start talking about flag patterns. You can start talking about, I mean, so much shit. And that's the problem. There's all these facets, and you just have to understand that when you go in this game of getting into understanding from an assessment perspective, right? Technical analysis, you're analyzing something from a technical perspective. There are many different types of ways that you can do that. So I just like to go straight down and go from technical analysis, market structure, price action. Not technical analysis, candlestick patterns. Not technical analysis, triangle patterns, flag patterns, all the bullshit. Go straight down and study price all the way through. And I think that's the most important thing. M&Ws. You know what I'm saying? What's the other one? Fucking, Carla, what's one of those crazy patterns everyone's talking about? Cup and handle.
Yeah, cup and handle.
You got some more. What do you got? I haven't studied this shit in so long. What do you got?
Dark cloud cover.
What's it called?
Dark cloud cover.
Dark cloud cover. I remember that.
This is
I
fun.
got a question.
Dojis, candlesticks. How important is that? We see dojis all the time, and then they're supposed to be reversal. I mean, what is that? Go ahead, Joe.
Yeah, I got a question you can answer.
Mm-hmm.
Somebody wants to know what the fundamentals that drive gold. He really wants you to answer his question.
Oh, yeah,
Fundamentals that drive gold.
Yeah. And he said he likes your shirt.
Thanks, dude. I'm coming out with a clothing line. I swear, guys. It's coming. I get too many shirt compliments to not come out with a clothing line. Fundamentals that drive gold. So, folks, there are core fundamentals that drive certain asset prices, 100%. And what I mean by that is basically, okay. So let's stop talking about trading for a quick second. Let's start talking about something else. Let's talk about car prices. Let's talk about a Tesla, for instance. Okay, can we talk about Tesla real quick? It's gonna make sense to you in a second. So when you ask yourself, what are the prices that drive Tesla? All right, what are the prices that drive Tesla prices? What are the factors that drive Tesla prices? Sorry. So we can say supply and demand is a core one. That's huge, right? How much people want a Tesla is going to be the immediate, just huge variable out of all the variables. It's going to be the biggest variable that drives Tesla prices. I think we can agree on that. Okay, not the price of the tires. Okay, tire prices aren't factored into this huge degree to where it's like valuing Tesla car prices massively. Okay, it's how much people want the car. I bet if demand slows down for the Tesla, you're going to get 10, 15, 20, 25, 30% declines in the price of the car. Okay, there are some things that you just can't get away from when it comes to that car price. All right, but overall, supply and demand is huge. So can we start right there with that? Now, outside of that, we got to ask ourselves, well, what's the second biggest thing that factors into Tesla car prices. All right, we can potentially say certain assets, right? Certain actual what would you call it? Certain things that make up the vehicle. And so one of the most valuable things that make up a Tesla is the cobalt and the battery, the lithium-ion battery, stuff like that, right? So let's pull back a little bit. Cobalt prices increased over 150% back in 2017. Okay, that massively impacted in some capacity the cobalt industry. Okay, so you're getting more prices per pound or prices per ton and whatnot, right? And so that did factor slightly into the price of the Tesla. So there was actually a move from a 5 to 10% price move because the price of the lithium-ion batteries, which were coming from different mines all over the world, obviously, but cobalt, which is a huge part of that, was being factored in. And so what you had was that one variable, that one fundamental variable of how the car is made up was factoring into the actual price of the car as well. So that's another variable. So again, there are multiple different variables that drive asset prices. So you ask about gold, we go back to the same question. The overall massive demand that gives gold value or not is actually central banks. Okay, central banks putting up tons and tons, well, I guess you can say trillions of dollars of their capital to store gold. You see a lot of price increases relevant to that. Now, what's another one? See, the thing about gold is there are huge factors that can sway the asset price dramatically. Another one is just the overall idea of risk sentiment. The riskier the market, okay, what's going to happen? Right? The more people see fear and all this crazy shit going on, what do you think you're going to get? Now, here's the problem with gold prices. Here's the problem with XAU. It's a heavily manipulated asset because gold is a derivative here. When you're buying gold in your brokerage account with TD Ameritrade or with E-Trade, or if you're in a Forex, all right, you can buy gold with all these other different brokers all over the world. Jesus Christ, Forex.com, Oanda. Some people don't have access to the metals in Oanda, so on and so forth. Yeah, okay, you're actually not even buying any gold. You're not buying shit. Okay, you're buying a derivative. You don't get ownership of anything. All right, and so what do you think happens? What happens on many occasions is that the government or whoever, central bankers or whatever, they artfully deflate gold prices during heightened times of volatility. Think about that shit. All right, 2008, you didn't get a parabolic move in gold in the capacity that you really should have because the government literally suppressed prices. All right. So they became massive gold sellers. Okay, so you have to understand that there are things out of our control in a sense, and the market isn't always so fair that you gotta take into account. But again, so overall scarcity, it is supposed to give gold an appreciation or a depreciation in value based off of how tumultuous the actual market is, right? Based off of how fearful people are in the overall economy. I think that's one of the biggest ones. Keep an eye on what's happening in central bank activity. These data releases come out every single month on what central banks are buying or selling gold. Keep an eye on overall risk in markets. Keep an eye on the G7. Make sure the G7 are doing the things that they got to do.
I'm gonna call out questions.
All right, cool. Go for it, man.
So Kenny Pitt wants to know, do you guys anticipate a major sell side move on the GBP, assuming BJ calls for elections?
So let's just kind of go over real quick, what BJ mentioned was that basically what? He said, hey, I'm going to get Brexit finalized by Halloween. If that in any capacity is like resonating in everyone's mind that is involved in capital markets, if that is something that he continuously says and sticks to, then yeah, we're going to be in some huge problems because at the end of the day, we're in September. October 31st is very, very close. All right. At the end of the day, if that goal is not hit, he turns back to, Theresa May. He turns into another Theresa May. Theresa May didn't get shit done. Theresa May promised continuously that she would get shit done. Now, was that in her control? No. She's dealing with a council of people. This is why you can't make these bold claims, right? But when you do make these bold claims, then at the end of the day, the market is going to hold you to those claims. They're going to hold you to what you say. And so 100% we're going to see some issues. That was a good question. We're going to see look, it depends on if people remember that he had a goal of Halloween. if that isn't resonating or if that's not something he stands by, because the second a reporter asked him a question regarding this exact same issue, when do you think you're going to get it done? The more the more he kills on that, the more the market's going to factor it in, and the more likely that honestly, I mean, not the more likely, but if that doesn't happen, the more the markets are going to be affected. Back in 2016, Donald Trump, what was he running on? All right, Donald Trump was running on getting away with Dodd-Frank. Okay, Dodd-Frank was the financial regulations that Obama put into place so that it would give more security and more safety into the actual global economy and stuff like that, right? He didn't want 2008 to happen again, so he put in a lot of regulations. All right, so for long story short, all right, one of my mentors, he was managing a big fund at the time. He mentioned that one of his buddies who was working at Goldman Sachs, 2007, Goldman Sachs proprietary trading firm. Proprietary traders, remember folks, are doing what we're doing here. Goldman Sachs had an arm of people that were basically, they had a trading desk where they were literally buying and selling currencies. Now think about how counterintuitive that is, because Goldman Sachs is an investment company, okay? They're not a commercial bank. They literally are taking companies to market. They get insider information all the time, and they had a proprietary trading desk where they could trade that shit, okay? Obama said enough on a proprietary trading desk for commercial and large investment companies. He saw in 3 years that proprietary trading desk go from 200 to 2 people. All right, Goldman Sachs revenues cut by hundreds and hundreds and hundreds of millions of dollars. Donald Trump comes along and says, hey, I want Dodd-Frank to come on back. I want Dodd-Frank to come on back. There's too much regulation. There's too much regulation. After this video, okay, after the live, go look at Bank of America. Go look at Goldman Sachs prices. Go look at Wells Fargo. Go look at JP Morgan. In 2016, November 2016, I want you guys to go do this shit. Don't fuck around. Go look at those tickers. In 2016, November 2016, you see them immediately go parabolic once everyone was what? Shocked that Donald Trump won the election. People thought Hillary was going to win. When people saw Donald Trump win, those literally billion-dollar companies increased in valuation by 40 and 50% because of the idea that he was going to do away with what? Dodd-Frank. Did he do away with Dodd-Frank? No. Go look at those asset prices right now. Go look at all those banks right now. Okay? So this is the kind of shit. The more these people, the more these politicians, the more these upper heads of state say things and they can't commit to them, you're going to get a massive valuation in the price. If they don't fucking execute, you're going to get a massive sell-off. All right? It's just how the game goes. So if Boris doesn't keep with his word, you're 100% going to get a massive sell-off. It's probably one of the only reasons why markets are staying stagnant at the moment. Go ahead, Ryan.
XJCN wants to know, what central banks are currently hawkish and dovish?
Hawkish and dovish. Okay. So as we know, okay, let's pull back. The U.S. right now, what did we just do? The U.S. just lowered interest rates. So does that mean that the U.S. is a little bit more dovish? They have to be. Okay, they have to be. They just lowered interest rates. Okay. Now outside of that, everyone wants to be hawkish, but can they be hawkish? Are we seeing inflation growth? We're not. Do you think Japan wants to be hawkish? They love to be hawkish. They love to get out of their negative interest rate environment, something that's never happened in the history of the world. But they can't get out of it, right? Because they can't stimulate their economy. So many of them want to be hawkish. Australia is probably going to follow and do what the US dollar did. So Australia wanted to be hawkish, but now that the US dollar lowered rates, you're probably going to have Australia also lowering rates. So I'd say the most hawkish, if you were to put it in the spectrum of the most hawkish and the most dovish, Japan has a perceived hawkish stance because their rates are negative, but at the end of the day, the economy is not hawkish in any capacity. It's bearish as bearish can get. Think about if the US had negative interest rates, guys, all right? Okay, this would mean if you had $250,000 in your savings account, you'd be losing money every single month. You'd be losing money. You would get deductions from your your savings. That is happening in Japan right now. Okay, there are millionaires and billionaires running out of Japan and running out of China because of obviously the cost of living, but also because of negative interest rates. All right. Why do you think we just saw so much strength come into the Japanese yen, so much strength come into the CHF? Okay, when all this risk starts to come into the economies in the world, you get this massive influx of capital back into Japan. The reason you get that is because no one wants their money in Japan because they're so bearish. So I would say Japan is the most bearish economy right now, just based off the fact that they can't do shit. Maybe they want to be hawkish, but they can't be hawkish right now. All right. I would say Europe right now is probably the most hawkish economy. If we're talking about G7, you have a lot of emerging market economies right now that are performing better. But I would say right now Europe is probably the most hawkish. We're not getting good numbers out of Germany. Germany wage growth did just slow down a little bit. We're not getting good numbers out of France either. Okay, so these are the largest economies inside of the EU. So that being said, they're still a little bit more hawkish. So what's happening is there's a bond program that's ending right now inside of the EU. As that is slowly ending, that is a hawkish thing to do. They haven't stopped that process yet. As that bond program slows, basically they're stopping the maturing of their bonds. It's complex shit, guys. If you don't know what I'm talking about, I gotta say it, you gotta get in the academy, all right? If you don't know what I'm talking about, you gotta learn this stuff so that you can actually utilize it. Okay, it does get a little bit more complex than the little cutesy stuff that I put out on the channel, okay? But it's very powerful information once you use it the right way. But they are slowing down some things that are happening inside of their bond buying program, and that is helping the growth of the economy. Brexit's a whole nother deal, and you got to deal with the global trend of just the market tenseness, and that's not helping too much. Swiss franc, I would also say Swiss franc is pretty hawkish as well.
Vito Bonificio wants to know, do you use volume profiles?
Volume profile, okay guys, so for anyone who doesn't know what volume profile is, volume profile comes from level 2 markets, okay? Again, got to learn a little bit more about market structure and how markets work if you don't know what I'm talking about. Volume profile comes from level 2 markets. Forex is a level 1 market. Volume profile is useless in Forex. Completely useless. You don't get times of sale in Forex markets. You only get price. All right, you only get price. I can't see how many people bought the euro today. I can't see it. Only thing I can see is what happened in price. You know what's amazing? We get a massive price spike in the euro just based off of the lack of liquidity. If one person comes in and no one else is there, the euro could shoot 200 pips on Christmas, okay? And we wouldn't be able to know that that's what happened because you don't see the volume, but that's the problem when you don't have a level 2 market, which is why a lot of people say you can't make money in Forex if you don't have a level 2 market. Obviously, you can make money in Forex if it doesn't matter if you have a level 2 market, but this is why it's even more important to use fundamentals. The best traders I know that are using technicals use volume, and they're trading in futures, they're trading in options, and they're trading in the stock market. This is why it's really hard to use technical analysis in Forex because you don't get that extra